I want to share with you an interesting pattern. So I'm looking at this V-shape price structure over here, and if you look closely, the slope down looks like a very nice flagpole, and then we have the retracement, which is almost textbook flag type of retracement. And the question is, does this V-shape invalidate this flag structure? So to be clear, I would like to describe what a valid flag actually looks like. So there are two things here. The first, the flagpole shows a strong impulse. Check, we have this. And then the flag shows controlled correction. Check, this is very controlled, it's even. And then the third step is the breakout. What matters for the flag is the actual shape and the behavior of the price. The context before the pole, the flagpole, is secondary. So to answer this, no, the prior dip does not invalidate the flag. In fact, many strong flags start exactly like this. What matters is momentum, not what happened earlier. And this type of structure here, it's commonly known as the V reversal continuation flag. There are situations in which the prior dip, this V-shaped structure, would matter in influencing this flagpole, and that is if the price is inside major resistance. For example, the move is just a bounce inside a larger uptrend. Or if we zoom out from the 15 minutes to a 4-hour chart, and if we were to see a major uptrend, then the flagpole would be invalidated. But here we can see that price is below the 200 moving average, and if we zoom in, we have the flagpole set up here. The way we would trade this is we enter a short position. We can enter just below the flag, stop loss above the flag. We can measure the distance of the flagpole. That will be our take profit area. So in this case, we could move it like this. So the risk reward ratio would be about 2.1. Okay, let's see how this would play out. Sometimes you have to be patient with these Forex patterns, but eventually they do play out well. And a good sign is whenever instantly the price goes in your favor, that's usually a good sign.